Welcome to Solidarity Spotlight, the place where we share with you bleeding edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. The cryptocurrency landscape is experiencing a significant recalibration as September 2025 draws to a close, with market dynamics reflecting both challenges and evolving opportunities across the digital asset ecosystem. The most prominent development centers around a substantial market correction that has captured the attention of investors and analysts worldwide. The total cryptocurrency market capitalization has declined by over 4% from its August peak of $4.17 trillion, representing a meaningful shift in sentiment and positioning within the space. This correction extends beyond simple price movements, reflecting deeper structural changes in how institutional and retail investors are approaching digital assets amid evolving macroeconomic conditions. Bitcoin's performance during this correction has been particularly noteworthy, demonstrating relative resilience compared to alternative cryptocurrencies. Currently trading at $115,756, Bitcoin has maintained a more stable trajectory, even as other major digital assets have experienced more pronounced declines. Ethereum, for instance, has dropped 10% and is currently valued at $4,465.51, while other prominent cryptocurrencies like Solana have declined 2.11% to $237.87, and Dogecoin has fallen 3.89% to $26.42. This divergence in performance patterns suggests that investors are increasingly treating Bitcoin as a safer haven within the cryptocurrency space, potentially signaling a maturation in how different digital assets are perceived and valued. The market correction appears to be driven by a complex interplay of macroeconomic uncertainty and regulatory ambiguity, factors that continue to shape investor behavior and institutional adoption patterns. Federal Reserve policy expectations and broader economic conditions are influencing risk appetite across all asset classes, with cryptocurrencies experiencing heightened sensitivity to these macro forces. The relative outperformance of Bitcoin during this period may indicate that institutional investors are viewing it as a more established store of value compared to other digital assets, potentially accelerating its evolution toward a digital gold narrative. Simultaneously, the market is witnessing remarkable innovation in stablecoin development, particularly with the introduction of the first ever XRP-backed stablecoin. Enesis, operating on the Flare network, has launched this groundbreaking financial instrument by forking Ethereum's DeFi protocol, marking a historic milestone in the integration of XRP into decentralized finance ecosystems. This development represents a significant technical achievement, as XRP's lack of native smart contract functionality has traditionally kept it outside the broader DeFi landscape. The creation of this stablecoin enables XRP holders to participate in yield-generating activities while maintaining exposure to their underlying asset, potentially unlocking substantial value for the XRP ecosystem. The implications of this XRP-backed stablecoin extend far beyond technical innovation, potentially reshaping how non-smart contract assets integrate with modern DeFi infrastructure. The total value locked in native XRP-based DeFi protocols has been growing steadily, exceeding $100 million, according to tracking data, with the native XRPL DEX responsible for the majority of this volume. This growth trajectory suggests increasing institutional and retail interest in XRP-based financial products, which could lead to enhanced liquidity and utility for the broader XRP ecosystem. Institutional investment flows continue to provide important signals about market sentiment and long-term adoption trends. Bitcoin spot exchange-traded funds experienced significant activity, with total net inflows of $223 million recorded recently. The BlackRock ETF IBIT led this influx with a single-day net inflow of $246 million, bringing its historical total net inflow to $60.645 billion, demonstrating sustained institutional appetite for Bitcoin exposure through traditional financial vehicles. However, this positive flow was partially offset by outflows from the Grayscale ETF GBTC, which saw $23.4955 million in net outflows, illustrating the ongoing rotation between different Bitcoin investment products as institutions optimize their digital asset allocations. The total net asset value of Bitcoin spot ETFs now stands at $152.306 billion, representing 6.63% of Bitcoin's total market capitalization. This substantial institutional footprint underscores the growing integration of Bitcoin into traditional financial markets and suggests that institutional adoption continues despite short-term market volatility. The cumulative historical net inflow of $57.717 billion into Bitcoin spot ETFs represents a significant vote of confidence from institutional investors in Bitcoin's long-term value proposition. Regulatory developments continue to shape the blockchain landscape, with coordination between the Securities and Exchange Commission and the Commodity Futures Trading Commission reaching new levels of cooperation. The joint statement issued by these agencies outlines collaborative efforts to harmonize regulations and foster innovation in financial markets, with particular focus on digital assets and crypto products. This regulatory alignment aims to eliminate the uncertainty that has previously driven crypto innovation overseas, potentially creating a more favorable environment for domestic blockchain development and institutional adoption. The regulatory framework evolution includes plans to align product and venue definitions, streamline reporting standards, and coordinate capital and margin frameworks. Additionally, both agencies are exploring innovation exemptions or safe harbors for decentralized finance protocols, which could enable more sophisticated peer-to-peer trading of spot crypto assets and derivatives while maintaining investor protections. This regulatory clarity could prove transformative for the broader cryptocurrency ecosystem, potentially accelerating institutional adoption and enabling more sophisticated financial products built on blockchain infrastructure. Ethereum's technical roadmap continues to evolve with confirmation of the Fusaka upgrade timeline. Ethereum core developers have confirmed that the Fusaka upgrade will activate on December 3, 2025, following thorough testing on 3 public networks throughout October. This upgrade represents a continuation of Ethereum's scaling initiatives and includes provisions for expanding blob capacity through subsequent blob parameter-only forks. The planned increases from current limits of 6-9 to eventually 14-21 blobs could more than double the network's capacity for Layer 2 transaction data, potentially reducing costs for users of scaling networks significantly. The Fusaka upgrade's impact extends beyond technical improvements, potentially influencing Ethereum's competitive position within the broader blockchain ecosystem. Enhanced blob capacity could make Ethereum more attractive for Layer 2 solutions and application developers, potentially driving increased network utilization and value accrual. The upgrade's focus on scalability improvements comes at a crucial time as multiple blockchain platforms compete for developer mindshare and user adoption. Recovery proceedings from the FTX collapse continue to unfold with significant implications for the broader cryptocurrency market. FTX creditors are set to receive $1.6 billion in the third distribution round, with payments scheduled for September 30th. This substantial return of funds to creditors could inject significant liquidity back into cryptocurrency markets, as many creditors may choose to reinvest their recovered funds in digital assets. The timing of these distributions coincides with current market conditions and could provide support for asset prices if creditors allocate their recovered funds to cryptocurrency purchases. The ongoing FTX recovery process has broader implications for market confidence and regulatory oversight. The ability to recover substantial portions of creditor funds demonstrates improvements in bankruptcy proceedings for cryptocurrency companies, and they increase confidence in the overall ecosystem's resilience. However, the distribution of these funds also represents a potential source of selling pressure if creditors choose to diversify away from cryptocurrency exposure following their FTX experience. Enterprise blockchain adoption continues to accelerate across various sectors with increasing focus on real-world asset tokenization and supply chain applications. The global blockchain technology market is projected to reach approximately $57.7 billion by the end of 2025, with forecasts indicating growth to $1.4 trillion by 2030. This growth trajectory reflects increasing enterprise recognition of blockchain's potential to improve transparency, security, and automation across business processes. Real-world asset tokenization has emerged as a particularly compelling use case, with the tokenized asset market potentially reaching $2 trillion by 2030, according to industry projections. Financial institutions are increasingly exploring tokenization of traditional assets like bonds, equities, and real estate, creating new investment opportunities and improving market liquidity. This trend represents a fundamental shift in how traditional assets are managed and traded, potentially democratizing access to previously illiquid investments. The convergence of artificial intelligence and blockchain technology continues to create new possibilities for decentralized applications and smart contract functionality. AI integration is being used to optimize smart contract logic, enhance on-chain data analytics, and power decentralized autonomous agents. This technological convergence could accelerate the development of more sophisticated blockchain applications and improve the user experience across decentralized platforms. Market sentiment remains cautiously optimistic despite recent corrections, with many analysts maintaining bullish long-term projections for major cryptocurrencies. Bitcoin price predictions continue to target levels around $120,000. Supported by fundamental factors, including halving-induced supply constraints and growing institutional adoption. These projections reflect confidence in Bitcoin's role as a digital store of value and its increasing integration into traditional financial systems. The broader cryptocurrency ecosystem is experiencing increased sophistication in trading and investment products, with new exchange-traded funds and institutional vehicles continuing to launch. Grayscale has introduced new ETF offerings tracking multiple cryptocurrencies, including Bitcoin, Ethereum, Solana, XRP, and Cardano, providing investors with diversified exposure to the digital asset space. These product innovations reflect growing institutional infrastructure supporting cryptocurrency investment and suggest continued evolution toward more traditional financial market structures. Layer 2 scaling solutions continue to gain traction as the blockchain ecosystem seeks to address scalability challenges while maintaining decentralization and security. Various networks, including Base, Arbitrum, and Optimism, are competing to capture transaction volume and developer activity. The success of these scaling solutions is crucial for supporting broader blockchain adoption and enabling more sophisticated, decentralized applications. As the blockchain industry continues to mature, the integration of traditional financial concepts with innovative, decentralized technologies is creating new investment opportunities and use cases. The ongoing market correction appears to reflect a natural consolidation phase rather than fundamental deterioration in the blockchain value proposition. Regulatory clarity, institutional adoption, and technological advancement continue to support long-term growth prospects for the ecosystem. The evolution of stablecoin technology, particularly innovations like XRP-backed stablecoins, demonstrates the ongoing expansion of blockchain utility beyond simple value transfer. These developments suggest that the blockchain ecosystem is becoming increasingly sophisticated and capable of supporting complex financial applications that compete with traditional financial services. Looking ahead, the combination of regulatory clarity, institutional adoption, technological advancement, and innovative financial products suggests that the blockchain ecosystem is well positioned for continued growth despite short-term market volatility. The current correction may represent a healthy consolidation that establishes stronger foundations for future expansion as the industry continues its evolution toward mainstream adoption. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.